Typically, during an election scenario, a political party loves to show off its strength by bringing in more and more people for a rally. There'll be more people on the streets, there'll be more people on the bikes waving off flags, shouting slogans. That's just a way to portray their strength in the election. But if I were to compare this with a company which is listed on the stock exchange, can you imagine how they can show off their strength in the Indian stock market? Hi guys, see Rachana Ranade here, and I welcome you all to a new lecture in a new avatar, because this is generally not how I dress up. It's COVID-19 and lockdown, and in this entire scenario, yes, there's a little bit of boredom sometimes just sitting back at home. So I thought, let's try to use some flashy colors, which I generally don't wear. So yeah, just trying it out with a different get-up. Okay, so coming back to our discussion, COVID-19 scenario, yes, everyone knows about this. There's a lockdown. There is an overall gloomy situation in the stock market right now. I know for a fact that yes, stock markets have rallied for quite a few sessions now, but yes, still people are worried whether this is a short-lived up move. Will the market still correct? Will the Q1 results, which will start coming up in the near future, will they bring in more and more fear in the market? There are lots and lots of questions still unanswered, and there's a still big question mark which exists in the stock market right now. That is the reason why there are many companies which are still not coming out with an IPO. The companies are still fearing about how they can raise money in the market in this current scenario. But there is a company which is not fearing raising more and more capital even in this scenario. I think this is the way a company can show its strength in the Indian stock market. This is the way they can show off their strength, that even if the overall conditions are gloomy, we are coming out with an issue, we are coming out with a rights issue, and we still have this belief, we still really feel that there would be investors who would die to invest more and more money into our company. That's what the company feels, and that might be the reason why Reliance is coming up with rights issue even in this current scenario of the stock market. Question is, when is Reliance coming up with rights issue? For a fact, you should know today, 30th April, Reliance is conducting its board meeting wherein they'll discuss the Q4 results of financial year 19-20, number one. Number two, they are also going to talk about dividend if they want to declare for this financial year as a final dividend. And number three, they are also going to discuss about rights issue. Question is why? Why are they planning to come up with this rights issue? Reasons could be multiple. As of now, we don't know any specific reason, but the possible reason I feel is that they want to reduce their debt. If you have checked out my previous video on Facebook and Geo deal, that is also there also I explained that how this deal can possibly help Reliance to reduce their debts, because that was an all cash deal. Even as far as rights issue is concerned, they are going to receive a lot of money from people like you and me, from general public, and that's where Reliance can actually help themselves to reduce the debt. So what they will do is, whatever money they receive from this right issue, they can, if they want, they can use this entire money to reduce their existing debt. Is this the only way to reduce the debt? No. Number one, this rights issue. Number two, the Facebook Geo deal. Number three, if you remember, there was a lot of buzz about the Saudi Aramco deal. They are trying to go ahead with that also. And number four, there is also a possible deal with BP. So they are trying their level best. They are trying to fulfill their dream of becoming a debt-free company by 2021. And that's why maybe rights issue is also one more step towards becoming debt-free. One more question which comes to our mind is this something new for Reliance Industries? Have they given a rights issue in the past? Well, for your information, it has been more than 3 decades, that is 30 years since they had issued a rights issue. So it was more than 30 years ago that Reliance had come up with a rights issue, and that's why it's creating a buzz in the market. One more question to be answered is are there any other companies which have recently come up with a rights issue? Answer is yes. Idea, Vodafone, Airtel, Piramal, these are the few examples of companies which had recently come up with a rights issue. Going with the next discussion, I did talk about rights issue. When are they coming with it? Why are they coming up with it? Are there any other companies which are planning, which have come up with a rights issue in the past? But the very big question is what is a rights issue? Okay, so if I were to read out a simple meaning of rights issue, a rights issue is an invitation to existing shareholders. Please mark my words. It's an issue to it's an invitation to whom? To the existing shareholders to purchase additional new shares in the company. Okay, so like an IPO is given for everyone. The opportunity of investing is given to each and every person. There's no discrimination. But if I'm talking about a rights issue is an invitation only to whom? Only to the existing shareholders. Number one. Number two, very important thing. With the rights, the shareholder can purchase new shares at a discount to the market price on a stated future date. So what does that mean? A simple thing is that, just as an example, I may say that Vodafone Idea, right? Vodafone Idea had come up with a rights issue at roughly around 12 rupees when the existing market price of the share was somewhere around 15 to 16 rupees. So I hope you understood this point of what do you mean by issuing shares at a discount to the existing market price. For those who did not understand, one more time quickly, when Idea Vodafone had come up with the rights issue, at that time they had issued this at roughly around 12 rupees, whereas the market price was somewhere between 15 to 16 rupees. Okay, that's what we mean by discount to the existing market price. Okay, question is, when will we be eligible to apply for that? Number one, for that you should be holding the shares of Reliance Industries as on record date. So record date is nothing but a specific date which is announced by the company. You should be a shareholder of that company as on that date, then only you will be eligible to apply for the rights issue. Number two, a specific window is given. Okay, what do we mean by a window? Window is nothing but a start date will be given, an end date will be given, and between these two dates you will have to apply for the rights issue, then only you will be able to get this. Okay, now let's come to an interesting part. I'll give you an example to understand how this rights issue works. Okay, there are three possibilities with the rights issue. Okay, assume, of course, why assume? I am a shareholder of Reliance Industries, so I'll be offered this rights issue by the company. I have three choices. Number one, I can exercise my right. Okay, I can say, okay, I want the right shares. Possibility number two, I will say that I don't want the right shares. I'll renounce my right. Now, what do we mean by renouncing rights? I'm going to explain that. And number three, possibility number three is that I don't do anything. Okay, I just let it be as it is. I neither sell it, I neither use this opportunity. It's just let it go away. Okay, then what will be the possible scenarios? I'm going to take a simple example for that. Okay, so let's assume that you have 100 shares, okay, of any company, not Reliance. This is just a bookish example for you so that you can understand the concept of what do we mean by exercising rights, what do we mean by renouncing rights. Okay, so number one, assume that you have 100 shares of any company at 100 rupees each and you get a rights issue in the ratio of 1:1. Okay, so what does it mean? If you have 100 shares of any specific company, you will get additionally how many shares? You're entitled to additional 100 shares and at a discount of 20% to its market price. Discount of 20% to market price means what? Market price was 100. Discount of 20% means you will get a discount of 20 rupees. So now what happens? Assume that you exercise your right. Now what will this lead to? Exercising right means what? You will be applying for 100 more shares. At what price? At a price of, type it out, at a price of 80 rupees. Yes, at a price of 80 rupees. Now what happens? Your new purchase happens at 80 into 100 and that is nothing but 8,000 rupees per share. So let's understand. Originally you had bought 100 shares at 100 each. So that price was 10,000. New shares, you bought 100 at 80. So that is 8,000. So what is your average price? Average price will be what? 10,000 plus 8,000 divided by 200 and that will come out to what? That will come out to 90. So your average cost of holding goes down from 100 to 90. I hope this is clear. Possibility number two is what? Possibility number two is you renounce. Renounce means you sell it off. Now question is sell or transfer. Question is to whom can you sell off? You'll have to sell off to a person whom you know maybe. You can try to sell it off to me also. Okay, but for that you need my DP, my client ID, everything you will need that. Then only you can sell the shares. You can sell the rights, sorry, not the shares. You can sell the rights. So what do we mean by this? What do we mean by selling the rights? It means that assume that you are the shareholder of Reliance Industries, okay? And you say you don't want to apply for the rights issue. Then what you can do? You can sell the rights to me. So if I buy the rights, what will happen? If I buy the rights, I will be eligible to apply for the rights issue. Now what does that mean? I will be eligible to apply for rights issue. Even if I am not the shareholder of Reliance Industries, okay? So this is case number 2 that I'm talking about. I hope you're understanding this freshly. One more time. Who is the shareholder? Currently you are the shareholder. Currently I'm not the shareholder. Assume this is a new example. So currently, if you are the shareholder of the company, you will get a right to apply for the rights issue. In our new example, I am not the shareholder of Reliance Industries. So what you can do? Possibility number one, you can exercise the right. Possibility number two, you renounce the right. Renounce the right means what? You can sell the right. To whom can you sell the right? You can sell the right to me. Okay. Are you going to do that free of cost? Well, you may, but generally you will not. Okay. Assume that you sell the right to me at 10 rupees. What 10 rupees? 10 rupees per share. Okay. Now what happens? Assuming, it could be different also. If you sell it at 10 rupees per share, how many shares were you entitled to? Assume that you also held 100 shares at 100 each. Let's keep that same. So in that case, what will happen? If the original buying price of your share was 100 rupees and if you're selling the new rights to me at 10 rupees, then now what happens? Will your shareholding increase? Originally you held 100, how many shares? Originally you held only 100 shares. Are you going to apply for additional 100 shares? No. So new number of shares with you is what? New means 100 only. You had 100, now you will have only 100. What about that additional 100 which you are entitled to? You are not going to apply for that. You are renouncing that right. You are going to sell it off to me. Okay. So what will happen in this case? You will still be holding 100 shares only, but now at what price? Originally you had bought it at 100 and I paid you 10 rupees per share to get the right, to buy the right. So now your effective cost price per share is 100 rupees, original 100 rupees plus 10 rupees reimbursement you have got. So now your fresh cost price for the shares will be what? 100 minus 10, that will be 90. I hope this is clear. This is from your angle. Now for me, what is the benefit? Why am I buying it at 10 rupees? I'm buying it at 10 rupees because now I'm entitled to apply for the rights issue. I'm entitled to apply at what price? At 80 in our example. So I'll buy it from the company at 80 rupees. I have paid you 10 rupees. So what is my cost price? My cost price is 90 because I'll pay 80 to the company, 10 to you. My cost price is 90. But the current market price in our example was 100. Okay, so is there a gain for me also? Yes, and that is the reason why I will be still okay to pay you 10 rupees to buy the right. I hope this example is also clear. If not, after this lecture is over, you can again rewind and replay. You should be in a position to understand that. Okay. And last is what? Assume that you ignore, do nothing. Neither you exercise the right nor you sell off the right. Now what will happen? Your original price was 100. You had 100 shares. Now nothing has happened. Effectively, what has happened? New people have got it at 80. Okay. I mean, existing shareholders have got it at 80. Their effective price of holding has gone down. Okay. There might be a possibility. Okay. I'm saying there might be a possibility that the share price also falls after the rights issue. Now question is, you will say, why the share price will fall after the right issue is completed? Simple. Will there be more shares available in the market? Will the supply of shares be more in the market? Obviously yes, no? Because in our example, the rights was offered in the ratio of 1:1. So originally, if there were only 100 shares in the market, now there are 200 shares in the market. Could there be more supply in the market? Yes, but demand is more or less the same. So if there is more supply with more or less similar demand, there is a chance that price may fall. If the price falls, theoretically assuming that if the price falls to 95 and you have done nothing, then what happens? Your cost of holding is 100 only. And if the share price falls to 95, then you will be potentially at a loss. Okay. But please understand that whatever examples I gave you right now were just for you to understand the concept of what do we mean by exercising the right, what do we mean by renouncing the right, and what do we mean by ignoring the right. Okay. Would this happen in case of Reliance? That depends. Okay. Depends at what price they are coming up with. What would be the price of the right issue? We don't know. Today the board meeting is going to be conducted. So I'm going to do a follow-up video on this. So this is just the part 1 of the video where I'm talking about theoretically how things will work out. But once Reliance comes up with the actual numbers as to at what price they're going to issue the share and all that, then of course I'm going to do a follow-up video on that. So don't forget to watch the part 2 of this video as well. The last point which remains unanswered is question is, how do we apply for a rights issue? There are 2 possibilities. If your bank supports ASBA, okay, then you can apply through ASBA. Possibility number 2, if your bank doesn't support ASBA, then there's something known as a composite application form. I'm repeating, composite application form, which you will receive from the RTA, Register and Transferred Agent. That will be received by you through courier. But here there is a glitch. What is a glitch? If the lockdown doesn't end, see, we don't know the dates as of now, but if the lockdown doesn't end, then there is a possibility that You might not get the courier, and in that case, you might not be able to apply for the IPO. But then do we have a solution for that? We are going to discuss about the solution in the part 2 of this video. So as of now, you have to understand that there's a possibility that you will have a banker which supports ASBA. Possibility number 2, a banker which doesn't support ASBA. But there is a possibility number 3 that your broker might support this facility of applying for a rights issue through their portal only. Okay, so if you want to know which brokers support such a possibility, such a facility of applying through their portal, can a broker like Zerodha support this? Can a broker like Upstock support this? I'm going to do this in the next part of the video, where I'm going to show you actually how to apply through their portals, so that you get an all-in-all solution to understand the concept, to what would be the pricing, and towards the end, how to apply step by step for this rights issue. I hope you have enjoyed this content, and I hope you have subscribed to my channel. Keep sharing this video with your friends if you're liking the content. That's it from my side for the day. Jai Hind.